We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Vince Lanci, professor of MBA finance at UConn, commodity portfolio manager, and publisher of the Gold Fix Substack. Vince, thanks for joining me today. How are you?
Good. Thank you for having me. Good to see you again, Tom.
It's always a pleasure, Vince. You know, you and I have so much interesting discussion outside of the recording. And as I was kind of preparing for today's interview, there was a tweet that you put out earlier this morning that really made me kind of scratch my head, run my fingers through my hair, and wonder exactly what you're trying to really explain here. And I think this is a perfect time to be able to really chat about that and break this down. The tweet was, seriously, ... we don't own enough USD denominated physical assets. So what does this mean as a broad idea in the current geopolitical context?
Whoa. Okay. Well, maybe I should start by just saying like where that came from, because I was looking at price levels, because I'm very active in gold and silver right now. There's some good short-term signals, and I'm looking at them and I'm going, that's a buy, that's a buy, that's a buy. And I just went, and against the backdrop of everything that we're seeing geopolitically, tariffs, and the inevitability of more dollar weakness, which we'll get to, I guess. I looked at it, I just said, just buy everything. Just buy everything. Buy stocks, buy gold, buy silver, and your portfolio will do fine. Just be short the dollar. That's basically conceptually what it is. And stocks are leading the way on that. That's so that what I meant was everything points geopolitically, right? You hinted on something Martin Armstrong said, which is good to bring up. Geopolitically, from Martin Armstrong's point of view, geopolitically from, say, someone like my point of view, in terms of gaming out what Trump's going to do, and then domestically, the debt issue, the roadblocks that Trump has to deal with, and how he's going to deal with it, all of it converges on a weaker dollar. Mm-hmm. That's the path of least resistance and the path towards re-election for Republican congressmen and senators, and probably to keep world peace.
So, as you mentioned here, I spoke to Martin Armstrong this morning, and he had mentioned to me that basically he sees gold and silver reacting to this deadline that he has set for Russia and for Putin to basically get this peace deal done. So
right.
He sees it as an inevitability of basically more conflict. So, as you put, you see this differently from a geopolitical perspective than he does, but you're picking up on different signals, right?
Yeah. I mean, I actually think that he's a step further than me in his perception. So I'm saying, like, I'll go down, I will look at flight paths. So I'm sitting next to Martin, hypothetically, and I go, World War, that's not going to happen until this, and this happen. And he's going, it's going to happen. Those things are going to happen. So I'm at the point now where I'm not predicting World War, but I'm saying when he says that, I'm like, you know what? What would make him right? And the answer is, we're in a Cold War 2.0 now. It's U.S. versus the BRICS, or U.S. versus China or Russia, depending on who's in power. And we're in a situation where everyone's pulling back their resources, not just repatriating resources and withdrawing collateral from the West, but we're making it hard for each other to get it. So we're in a mineral war now, to paraphrase Josh Fair at Scottsdale. And so the thing is, I know you're going to laugh at me because I'm using the word again, but all mercantile errors end in war. They do. Mm-hmm. And I desperately have been saying, no, they won't. They do. Somebody gets pissed because someone's taking someone else's minerals, right? Somebody invades someone else, and it's like, poof, war. I need this. Wars over oil, things like that. So it's really about wars over resources. So I'm just forcing the M word there. But isn't that what we're going through right now? So when you look at it from my point of view, looking at the geopolitics through the eyes of the actual resources, and that's one way to look at it. And you look at it from Martin's point of view, which I'm not familiar what angle he's approaching, but I know he's well versed in the accounting of it, in the math of it, as well as understanding the people and personalities of the players, right? He and Tom Luongo have that in common. So when you look at it from my point of view, I'm like, there's not going to be a world war. I'm an optimist. I just think the dollar is going to zero. He's like, doesn't matter. The dollar's not going to zero fast enough. There's going to be a world war. So, I mean, I look at paths, and I look at signposts or intersections or inflection points, depending on who you talk to. And I think for Martin to be right, for Martin to be wrong, I hope the dollar has to drop. And I mean, look, I was thinking about this before we started, so I have some things that I'd like. If you let me, if you want me to, I can go into.
Of course, yeah.
I was thinking about.
I think this ties everything together really, really nicely. There's so many kind of like esoteric and separate ideas that this ties it all together well.
Yeah, I mean that's so true. And I mean, when you bring it up that way, the geopolitics and the domestic problems are the same, and it's easier to see them as the same when you strip away what the politicians are saying. So here's what I mean. Like on that post that I put out, I was basically saying buy everything denominated in dollars. Just buy. Buy companies that will benefit from the return of manufacturing, buy gold and silver, buy platinum, palladium, and copper, buy those bonds. I'm not so sure I would do that. But here's why, and it ties together what you're talking about. Trump, and I say this respectfully, latched onto a critical idea to make America great again. We would have to bring back manufacturing. Now, but this wasn't some vague nationalistic sentiment, It was, but there's more to it than that. It was a practical response to the end of globalization. As the world deglobalizes, the U.S. must become more self-sufficient. Now, that's a meme. People have heard that a million times, but why? Why? Well, here's why. In a globalized world, we borrowed freely and lived beyond our means. So our military might and global influence kept creditors comfortable. That dynamic is fading. Foreigners are holding fewer, less treasuries. That means we can't borrow as much. And if we can't borrow, we face a series of choices. And these choices, I think, were really highlighted very well by Valentin Justin at Credit Agricole. And I wrote a piece on that a long time ago, but he's been right. And so the choices that he laid out, and I'm going to rephrase here, are: one, we could lower our standard of living. That's the equivalent of eating bruised strawberries instead of the ripe ones that we're used to. Or we could cut spending on major government programs like the military, Social Security, Medicare, and Medicaid. But those cuts are politically impossible. Doge failed, right? Even if it did succeed, it failed, right? So what do we do instead? Well, we try to borrow again. We look for new lenders. We try to buy time. We say, this time we'll borrow and invest in something productive, Tom, like manufacturing. Why? Because in a deglobalized world, this is the heart of it. With less access to external capital, we must export goods to repay debt. This is a return of the M word, whether we admit it or not. Now, globally, not just in the US, credit is drying up. No one is extending long-term loans, right? So the bond market becomes less relevant. Credit becomes cash on the barrel, 30-day settlement world. American Express card. It's not a credit card. It's not investment. It's transaction by transaction. And that changes everything. So we have to find someone else to borrow from, which we can't, at least not yet, or at least not all at once. We have to and no one will lend it to us, right? We have to cut back on spending, which we can't or won't. We don't have the political will to do that, or we can build manufacturing. Okay, so let's look at the manufacturing part. We can build manufacturing, but it won't happen overnight. It won't happen in 2 years. Stock markets, however, of course, will likely rally in anticipation of this rebuild, and we're seeing that now. That's one of the reasons I think we're around. See, that's where I would push back on Martin. If gold and silver are rallying and stocks are not, I'd say, well, then stocks shouldn't be rallying, but they are. So I'm not saying he's wrong. Certainly the two of them can diverge, and gold does discount going ahead sometimes now. But I would say until I see stocks crap out, I'm not fearing for the end of the world. But if we're right, we'll all be dead, and I won't have to worry about being wrong.
I think. Sorry, just to interject for a sec. I think it's really important to understand these market signals, right? Like a couple weeks ago, and I asked a couple guests this, the oil's reaction to Israel-Iran. Yeah. That conflict, the 12-day war or whatever we want to call it, right. Oil didn't really do a whole lot to confirm that this was something to be really worried about. And I think personally, I learned a lot from that.
Yeah, it's funny because you're talking about oil, because in the 90s and O's, and even as late as 2010, oil reacted more violently to risk. And I think, and I'm not saying it wasn't a real risk, but I think the Middle East risk to oil was a little bit overblown. And it's easy to say it in the after. I guess what I'm saying is the press has picked up on it, and they found out. Look, the press is by and large dumb, right? Okay, so now you've got smart people out there on social media, and you got a critical mass of smart people. Oh, Strait of Hormuz, what's that? Oh, there it is again. There it is. And it's like, oh, we have something new to write about, and we don't have to hire a journalist. We'll just source it from Zero Hedge, or we'll source it from other places. Or, I've had my stuff picked up too, indirectly. But all that stuff that they started talking about created this end of the world scenario. Anyway, I'm getting off the beaten track. But oil is not reacting like it used to. I'm not so sure. I'm not so sure why that is. So, for example, if I wanted to push back on Martin and say, oil didn't react that much, Martin, you're wrong. I'd be wrong to say that, because I personally think there's another secular trend in oil coming, and that is replacement energy, whether it be nuclear or what have you. So I only can look at stocks. That's the only place I can disagree with him on. But I also think, to your point, Trump just cut a deal with the Saudis. He sat down with them and said, "You're going to invest in us. You're going to buy our treasuries. We're going to buy your oil. We're going to give you missiles below the discount price, for your own defense. And by the way, Israel's going to invade Iran. When they do, pump some oil for us." Mm-hmm. And that's what the Saudis always do. And so they kept a lid on it. But yeah, that's the oil part. But the thing is, stock markets have rallied. Oil has stayed underwater in anticipation of this rebuild with new energy, because our culture is addicted to optimism. But we can't really get the manufacturing build back. So what does Trump do? He can't borrow more. I'm going to bring this home towards why the dollar is going to zero, more or less. He can't borrow more from abroad. He can't build industrial capacity instantly. So he travels the world, cutting deals with other countries. He says, buy something, anything from us. That might be silver or oil or even Harley Davidsons. Cars are essential for export, so second only to military equipment. And the U.S. is trying to get other countries to buy our cars. But here's the critical part. To sell these goods, everything, Martin's geopolitics, our debt, our economy, our ability to export, they all tie to the dollar. To sell these goods, to make sure we don't have a world war, to make sure we do lessen our debt materially as well as financially, the dollar must weaken. And if we can't manufacture more immediately and can't borrow more money, we got to sell what we already have. We have to sell like a resource exporting country. That means oil, gas, metals, basic things. And to make those sales competitive, the dollar must drop. So to sum up, the dollar will weaken because we need to export. It will weaken because we're adding more debt, hoping to stimulate growth. It will weaken because we are implementing new policies, ones that haven't even hit the headlines yet. Here's one that it may never hit the mainstream, but it's big, and we're talking about it now. One of the ways he wants to offset taxes or tax breaks is tariffs. There's another thing. He wants to charge capital to enter the U.S., sort of financial velvet rope around a nightclub. It makes sense. We offer the world a rule of law and capital markets that are, even on a bad day, still superior to everyone else's. But exclusivity comes with a cost. Now, so I don't want to go into the whole diatribe about it, except to say, as we're rebuilding supply chains, we're also trying to charge for payment chains. And if you want access to dollars, that's going to cost you money. That weakens the dollar if we do it. It's another knife in the dollar. If he does this, some people are going to say, well, screw it, I'm not going to put my money in dollars. I'm not trading with them anyway. And there's going to be less people holding dollars. And the result of that is we'll keep a lot of hot money that likes to park their money in the US. And everything in the world says the dollar is going to weaken. And yield curve control, things that we're going to do to keep the dollar weaker so we can export, they're all coming. The debt, I mean, getting a little esoteric, but enough with the rabbit hole, except to say I think it all boils down to debt or war. I'm sorry, weaker dollar or war. That's where I am. So,
So you've also recently written about this idea that China could really destroy the US's average inflation targeting. So how are they going to do this? And what levers do they have over the inflation here?
Well, the idea that I kind of developed or got expanded on comes from a Simon White article I read on. He's a Bloomberg macro analyst, and when it comes to macro, he's very good. And he was going through China's M1. These are all macro things on that post, and he believes. Well, first of all, money supply means more dollars chasing fewer goods, right? It's simply put. And there's data, statistics going back saying that when China's money supply increases, it starts to export inflation. We're the US with a global reserve currency. And so if we have inflation, you get inflation. We export it with our dollar. If we have disinflation, the world worries about it, or deflation or recession. Well, that power change is shifting. China's economy is a lot more dominant financially than it has been. And their money supply their M1 is on a trajectory like ours, starting from a much lower level. So we're both going up on a 1-to-1 slope, but we're starting at 2 and they're starting at like 0.5. So I think to paraphrase what Simon said is what Simon said. I can't believe I just said that. Money aggregates are leading indicators for growth and market direction. Simple enough. They precede changes in employment, inflation, and GDP. Now, while central banks and commercial banks both create money, only China's liquidity expansion has been robust to materially affect the global liquidity cycle in the current phase. Now, he has some charts, and you'll see that when we increase liquidity in one of those charts, when we increase liquidity, it doesn't really move global liquidity anymore. When they increase liquidity, it moves global liquidity. Now, without getting too esoteric about it, that's the chart that says money in China is global money, if we bring it up for later. The human way to say it is this. When China says we're going to print money, yeah, that's the chart. That chart is a really good chart. It might be a little hard to see, but the US is the light blue and China is the, I guess you call that brown or beige. And you'll notice that the G10 ex the US is on a very tiny increase in spending. But the US is on a bigger increase in spending right now, and China is now catching up. So look at it this way. China will catch up to the US. The other chart, I'm not asking you to bring that up, but the other chart related to that is when we increase money supply, it doesn't really change the world's liquidity. When they increase money supply, you could see it wobble things. And as commodity people, here's the example. When China loads a bazooka, what happens? Copper goes up, gold goes up, silver goes up, et cetera, et cetera. So when the US increases money supply, it gets steered towards stocks. China's like, buy whatever you want. And that's what happens. So I think the most important part of this that I'm starting to see pop up at reputable places is the West, the folly of Western targets. It's about inflation. China's next M1, the M1 is growing. Their money supply is growing. China's M1 growth, I believe, is going to probably obliterate Western inflation targets. Now, what I mean is every central bank needs you to believe in Santa Claus. And so they say, we have an inflation target of 2% or 3% or 1.5% or whatever. And the ECB, I have a chart of the ECB calling for a target of 2%, and they were wrong for 10 years. And they kept saying it. Any day now, we're just turning the corner, what have you. And that was when they were under 2%. Now they're over it, and they're saying 2%. And we're not, maybe they are there now. But the point is, the central banks create a target to give you something to look at. This is, again, very cynical of me, but if we get there, that's fucking luck. That's not skill. And it's good to have a goal, but to broadcast it like 2% any day now, it's going to happen. And what they end up doing is they're just focusing your eyes on it like any influencer on YouTube would. You're not going to put this on YouTube, are you? Well, you're not an influencer, so you're just a commodity guy.
Yeah.
Anyway, what I'm saying is the illusion of inflation targets has been perpetuated by no challenger to the West's propaganda dominance. And I think the East, China leading the charge, is going to inadvertently, in quotes, blow that out of the water by just printing money. And they're going to print money and commodities are going to go up, and that's going to be inflationary.
And yeah, to make that explicit, if they're printing, that means they're buying these commodities that they're already walling off. Let's say taking rare earths, for example, if they have the only real refining capability of rare earths in the world, and they're saying nobody else gets them or the US doesn't get them, then that inherently makes the cost for everybody else go up.
Yeah. You know, that reminds me, you were talking about them buying natural resources. And here's another thing. Forget the fact that don't forget it. They're going to blow away the inflationary targets. Mm-hmm. But there's another mechanism to this. Of course, their economy sucks and they have to print money to fix it. But there's another thing, and it's very BRICS oriented. And it's the internationalization of the Yuan has to happen for the BRICS to work. So to start with your point, they're going to print money and they're going to buy raw materials. What are they going to do with those raw materials? They're going to make finished goods, and they're going to want countries to buy the finished goods, taking us out of the equation. But that's what the BRICS are about. The BRICS are about, China's about, we're going to print more yuan. We're going to buy those raw materials from, let's say, Saudi Arabia in yuan. We're going to make them comfortable holding yuan by saying you can convert it to gold. Mm-hmm. And then we're going to say, we took that oil we bought from you and we made this new thing. And the Saudis are going to go, well, we got yuan. I guess we'll buy it. And you create a virtual cycle that creates global holdings in the yuan. So it's it's inflationary for the US, it's inflationary for the West, and it's conducive towards more people owning yuan because it's going to be semi or loosely backed or pegged to gold.
Mhm.
And so that's it. I agree.
So do you think that they're trying to position the yuan to be the new reserve currency, Vince? And what are, let's say, the positives and negatives, those downstream consequences of being a reserve currency for China that is trying to export all of these goods?
Well, I have an opinion geopolitically and I have an opinion culturally. Now, my cultural opinion is on what little I know, and there are other people who know obviously far more than me about that. But geopolitically, I feel simply that the world is splitting in half.
Mhm.
East and West. There's gold that trades in New York, and there's gold that trades in Shanghai. Same gold, different price. And they don't meet because you can't financially arbitrage them. So there's your Matt Riley said this, financial iron curtain going up between the East and West. So there's your Cold War 2.0. And that's the basis for the risk of war, at least one of the bases of the risk of war that Martin is talking about. So I believe, and by saying that, that's me saying they don't want to be a global reserve currency. They want to be a regional reserve currency, right? It's going to be yuan with gold as a kicker, and in the West, it'll be the dollar with stable coins as a kicker, or whatever the heck we come up with, right?
Mhm.
So, and then you'll need gold to trade back and forth. Excuse me, I have hiccups. So I don't believe that they want to be a global reserve currency. I believe they want to be a regional reserve currency. And moving to the cultural side of it, again, I'm not an expert on this, but I'll pretend to be on this one. I believe that if you look at China's path to rolling out, they're extremely paranoid of manipulation of their currency. I used to call their economy a hothouse flower. It's a beautiful flower in a protected environment. You take it out in the heat and it just dies. And what they're doing is they're slowly taking it out. And it's, it may fail eventually, but they're coming out slowly. And culturally, they've been screwed over when they go global. And I think they don't want to do that culturally. Also, and this is not cultural, but it's cultural influence. To be a global reserve currency is a big deal. And China doesn't want to be a big deal. Meaning, look at what happened in Israel and Iran, right? Who's the major military power in that region? China. I mean, Russia too, but China, right? We're seeing tests of their military and saber rattling off the shores of Taiwan. Well, why didn't they do something? Because they don't want to be the world policeman. They don't want to be the global reserve. They don't want to do that. I'm not saying they're not going to be aggressive in colonization or doing that in Africa and the Caribbean, but they don't have aspirations to be the global reserve currency. They do have aspirations to be the dominant economy and own every vote in the UN, but that's another conversation. So I don't think they want to be a global reserve currency. I think they're just fine owning half the world. Mm-hmm. No problem there. We'll just share it with you,
Well, I think there's also a piece there to maybe not showing their cards at this point.
Yeah, I mean, look, China doesn't have aspirations to be the global reserve currency, but if it's handed to them, they won't say no, right? So that kind of plays in with what you just said. Well, they're not going to show their hand. I don't really think she's that good looking, but if she asked me on a date, I wouldn't say no. It's you can't. So absolutely, if there was a war in the West and the U.S. got locked into combat with, I don't know, Germany and France, and which is actually kind of going on right now with Ukraine wearing us out. Look, you look at China, it's like China's going like this. Russia's our partner. They might get worn out from Ukraine. That's good for us. The West is our competitor. They might, we might end up being a global reserve currency after all. If it happens, we'll take it. I don't think they're going out looking to do it, but they are certainly going out making sure that they're expanded. The Chinese hothouse flower, that little solarium, it's like they're building it around the whole area. So eventually, you say you're not going to be a global reserve currency, but you end up being the global reserve currency. So I guess I'm kind of agreeing with you.
Vince, one of the other things, you kind of mentioned this, let's say, bifurcation of gold and these supply chains within the world, and especially the multipolar world as we're kind of coming to. You've said before that the West needs to rebuild its gold supply chain. So why does it need to do that?
Well, it needs to rebuild all supply chains, right? Okay, so we'll start with that. We have been dependent on the BRICS for supply chains for decades, over a decade or two. And that dependency over especially the last 10 years, supply chains in general have been outsourced. Labor, natural resources, logistics, that's supply chains. And gold has a dual role of money and a finished good. And we've allowed our supply chains, and it seems to me that we're still okay with that. We've allowed our supply chains to become outsourced. So the demand went to China, the vaults went to China, the gold went to China, and now the pricing is going to China. And unless we recapture part of that supply chain, and we're doing that now. That's what the repatriation of gold was. That's what the pulling gold out of London was. And there's stuff going on that we're not familiar with yet. So either we don't care about gold and the supply chain, and I'm wrong, and we have something else that's better, synthetic gold, I don't know, Bitcoin, or we are doing something behind the scenes. Now, I had, for the longest time, thought we were doing nothing behind the scenes, but we are now. We are, as a nation, really late to this, figuring this out, but we're doing it. So I may have used gold as an example of what we need to fix on the supply chain side. I think the easier and more obvious one, kind of to redirect your question, is towards critical minerals. So gold is, in my opinion, a critical mineral. It's money. But if you look at copper and silver and rare earths, we don't have any of the things that we need to rebuild our manufacturing. And so we need to make our own. And our supply chains are elsewhere. You can't get rare earths from another country. We have to build our own. Pentagon just bought 50% of a company to that effect. I mean, it's crazy stuff. But I could probably say more about it. But I think without supply chains, we can't get natural resources. Without natural resources, we can't manufacture. Without manufacturing, we're going to spiral downward in a race to the bottom between the dollar and our standard of living going down. Mm-hmm. How's that for a cheery close?
Well, Vince, when we think about this process, as well as the dollar going down and the U.S. trying to finance all of the entitlements and all of the programs that we said, that we already touched on, none of this is politically palatable enough to actually make meaningful cuts on. And one of the things that I want to get your thoughts on is this stablecoin rise and the passing of the Genius Act. This is something I think a lot of gold bugs should take a little bit of time to understand, even if they have an aversion to crypto and all of these things, which I understand. But how does the U.S. look at this as a new form of being able to finance the debt, or a new demand for debt?
Yeah, it's we need another country to buy our bonds, right? And stablecoin is that country. Mm-hmm. Okay.
Yeah.
So
exactly. Stable stand.
That's really right. It's really what it is. Now, going back to that Credit Agricole piece that I read a couple years ago, mm-hmm. that I'll probably unlock that for everyone. We broke that down. That's the part where he goes, the U.S. either has to spend less find someone else to borrow from, okay, or buy its own bonds. And at the time, Zoltan was saying something about that effect as well. And I'm like, yeah, this is a guy with a maxed credit card, and he can't get bigger credit, so he's either got to buy ground beef instead of steak, right? He's got to find some other idiot to give him a credit card, and no one will, or he has to work for a living, right, to make the money. And that's kind of where we were. And of course, manufacturing is working for a living. Finding another country is someone to give us a credit card while we're figuring it out. And the third one is spend less. We're not going to do that. At least not at the
none of those.
None of those, exactly. So none of those. So someone, I don't know if someone made this joke to me or I made the joke after someone said it to me, but it went like this. It was like I was doing a little study of capitalism, and the question I asked was, who are we going to sell these goods to? Who's going to buy them? Like, what are we going to make? Like, everyone, like, how many flat screen TVs can you buy? Now, being a little naive, I know there's innovation coming, but the guy's response to me was really good when he goes, capitalism is built on colonialism, which is mercantilism, right? And if you can't set up a colony, you can't develop a market. If you can't develop a market, you can't sell shit. And he said to me, what are we going to do? Are we going to fucking colonize Antarctica and then put some people there and tell them to buy our stuff? And that was his line of thinking. And my response was, shit, they could buy our bonds too. That was my comeback. And so that conversation spiraled into this. It spiraled into this. We need a new country to buy our bonds. And when you look at the history, this is what stablecoins come in. If you look at the history post-World War II, what do? We rebuilt Japan. We colonized, not the right word, but we rebuilt Japan, right? Marshall Plan, right? They bought our bonds, right? Everything was made in Japan. It was shitty. It was cheap. It was horrible. And then they got good, you know? And so then we moved the labor to Taiwan. When I was a kid, it was Taiwan, Taiwan ROC. It was a PROC. Taiwan ROC. Taiwan made all of our bullshit, you know, all of our plastic toys. And then Nixon comes in the 70s and he cuts a deal with Mao. China was splitting with Russia. And he's like, Mao, buy our treasuries and we'll buy all your stuff. We'll be your best customer. And that's how it happened. They started buying our bonds. We started buying their goods. So China's like, we don't want to do it anymore. And no other country can handle our debt because it keeps getting bigger. You're going to go to Zimbabwe? I mean, where are you going to go? Here's a good economy. Saudi Arabia. Yeah, it's a good economy. Russia's economy is no bigger than Texas, even if we wanted them to buy our bonds. Anyway, so we need a new country. Now, this is the key part, is there is no new country, Tom. We have to buy our own fucking debt. And because we're not at war, at least not yet, Martin, because we're not at war, right? We kind of are at war. Because we're not at war, you can't say, buy American bonds. You can't go out and put war bonds out. You can't become patriotically self-financing because we're not like that anymore. You can thank the left for destroying patriotism to a point where it's the disease is to be patriotic. Okay, back on the point. So we need to buy our own bonds. How are you going to get Americans to buy their own bonds? We're not going to. We're too smart. It's like, we know that rate's too low. Give us a higher rate. We don't want the rates to go higher. We need someone to buy them now. Well, you take the bond and you make it into an asset. Stablecoins. What's a stablecoin? Stablecoin. And I'm not being negative on them. I'm saying this is how it works. You take a stablecoin and you say, we're going to allow you to own, I'll use gold. We're going to allow you to own gold, physical gold. It cannot be rehypothecated. It will track gold. It's there. You're going to have to trust us that it's there because you're using a token. I can, I get it. I will not use it for that purpose, but it'll be the new shiny way to own gold. Okay. And here's the kicker. They go, And to own this token, you have to buy it's a JP Morgan token. You have to buy the JP Morgan stablecoin. The JP Morgan stablecoin can use anything for collateral. We prefer to use treasuries. If you buy a treasury through us, you can also get the upside of gold, as well as we'll give you 2% on the 4% rate. And so Americans become buyers of treasuries. And there's your country. We're the country. It's like stablecoin USA is the buyer of treasuries. And it would be, I can tell you all the negative things about it. It's going to be a scam. There's going to be problems. But the fact of the matter is, we're changing the rules to make it happen. Banks are going to issue these. People are going to go. It's going to be like at its peak, if it works. I think it will work. But at its peak, it'll be like money markets. Mm-hmm. Money markets were unheard of. And then, of course, after the crisis, I think it was 2011. They almost broke the money market. So anyway, stable coins are going to be the buyers of bonds. It's kind of like, here, buy a bond and I'll give you some upside to it for Bitcoin. It's like, okay, how can I say no to that? It's a structured derivative play. It's the oldest play in the book, but It's got a new name.
Well, it seems interesting from an incentive perspective as well, because Trump's World Liberty Financial, which, doesn't have a whole lot of, let's say, airtime everywhere else, has like a role to play within that system as well, right?
Oh yeah, wait. Is Liberty Financial the name of his crypto company?
Yeah, I think it's World Liberty Financial, and it's kind of like a crypto bank. As
okay, yeah, all right, good. I'm glad you brought that up, because it just, I knew about it, but I didn't care about it. A country, you could look this up, I think it's Saudi Arabia, bought a big chunk of Coinbase through Trump Liberty's stablecoin.
Right. Yeah.
Am I right? Did you look that up?
I think that sounds right. Yeah.
Right. So think about it. And this is like, you got a country that has a lot of cash, that doesn't want to use Western banks. You got Donald Trump, who's setting the table for this to happen, already profiting from it. And he's saying, listen, if you put your money into a stable coin, you can invest right into this bank. I'm sorry, Coinbase, without using a bank. And that's it. It's what Trump wants. Trump hates banks. Trump hates financialization. He's a classic corporatist, I've said many times. And so he wants direct investment with each other. So get rid of the bank, get rid of the middleman. So crypto does that. It's stable coins are perfect. Meanwhile, they'll crash tomorrow, right? Stable coins are perfect. They provide a buyer of US treasuries. So we've got to buy our treasuries, and our yields aren't going to go to 10%, right? They make the dollar, even though it's going to weaken, they make the dollar safe, not because it's safe like gold, but because it's got innovation. Entrepreneurial dollar. The dollar becomes upside. China's got the downside risk. China is the put. The US is the call now, right? What else do stablecoins do? They disintermediate banks, and there'll be like 3 banks left, and they'll all be the ones that are in cahoots or a part of the Fed. And then the last thing is, and here's the thing here's like the take to go with the bad, you can wrap it into a virtue. We're going to bank people in the poor parts of the world who don't have money. We're going to, and there's merit to that. But no, you're not going to go after a billion Indians and say, here's a penny of a stable coin. You're going to go to the fentanyl dealer, the drug dealer with $1 billion in hidden money in Saudi Arabia, and say, how'd you like to launder your money? It's like HSBC with opium all over again. So it's going to like the Bored Apes, the non-fungible token. That's what this is. This is a token, right? The Bored Apes. Okay, so you buy it for $1 million and you sell it for $990,000. That's a bank. It's a money laundering system, and there will be a lot of that. That's it becomes. The thing is, this is like I believe truly in this, that when innovation comes, and the country does need it, we'll use stablecoins as our example. The government pivots towards that thing. And for a period, the door is wide open and everyone can participate. And then as they get their handle on it, everyone has their own lifeboat, the laundered money, the hot money, the powerful elites, then the rules start closing it around and the common man gets shut out. So you got to be early, and you got to, I'm not recommending you go out and do this stuff, but there are companies out there to own. You're looking at 21st century plumbing for finance. So I don't even know what I was talking about. What was I talking about there?
Stable coins.
Yeah. Stable coins. Anyway, so stable coins.
Yeah, and the World Financial Bank.
Oh, yeah. Stable coins. All these things are going to happen. And, stable coins are going to have all these reasons for them to click. And one of them will be money laundering. But let's not look at that right now. Gold is bad because criminals use it. Stable coins, they do a lot of good. Whatever. Such bullshit.
Vince, on this road to mercantilism, I think it's interesting to kind of look at these signposts as you've put them. Russia recently launched a physical gold contract, as well as thinking about, let's say, the growth of the Shanghai gold exchange as well. So how are things changing within this gold market in the East, and what significance do you think this has? Is this just about taking pricing power and reliance away from the LBMA and Western exchanges?
Yeah, this is actually an old theme that I talked about a couple years ago, a couple times, but now it's happening. It ties in with the supply chains, right? So you'll hear me say supply chains do this and payment chains do the opposite. I don't want to look at it that way, even though I'm mentioning it. At the end of a supply chain for commodities is the price. Mm-hmm. So pull it out of the ground, refine it, re-refine it, manufacture it, make your solar panel out of silver, and then sell it. Well, the price is determined by the West. And if the price is determined by the West, because we had the demand at one time, and it's priced in dollars, then we influence the price very easily, although it's not visible, not easy to see, but it's easy to understand when you realize that if it's priced in dollars, we can use it to strangle people that are suppliers of it. So to back up a little bit, commodity pricing is determined ultimately by the region of demand, not the region of supply. So forever, the demand for gold and silver was in the West. We manufactured, whether it be the US or Germany, we refined, we had the technology to make it into something better, the innovation, if you will. And the supply was in Mexico, in Latin America, wherever, in China. And we buy the raw materials, we give them pennies on the dollar, and we'd innovate, and we would own the supply chain. And then as we were talking about the supply chain, little by little, started going in there. China's like, we'll dig it out of the ground and keep it. We'll dig it out of the ground and refine it. We'll dig it out of the ground and make a paste. And by the time it's over, it's like, you know what? We'll just sell you fucking solar panels, and that's the evolution of a good supply chain. At the end of the supply chain, whether it be for gold as money or silver as an industrial metal, there's the pricing. So now where was the demand? In the West. Where is the demand now? In the East. So what was gold that was pulled out of the ground and then refined in Switzerland and shipped to the US or London is now gold that's pulled out of the ground and stays there. That's the central bank thing that you noticed. So Eastern central banks are taking the gold directly from their local producers, homegrown gold, and they're refining it there, and they're keeping it there. So what's going to end up happening when you've got like little, I don't know, what's a common Chinese name? Like Smith for Americans, Wang, I don't know, Chow. It's like, Mary Chow goes, I think I want to buy some gold. And you go, okay, it's $50. And she goes, why am I paying in dollars? Mm-hmm. The gold's here. It's sourced here. The vaults are, why can't I pay in yuan? And eventually the pricing creates the demand for a local price. Right. So China has done that. They've done that. They've done it. They're there. they're there, and we're letting it go. Russia's now doing it. Russia's is more significant in the sense that Russia's already got experience doing this and they were successful. And the reason it's important is because from the Russia point of view, Russia did this with natural gas first. And what they were doing is the standards for natural gas come out of something called the APIs or the DOEs. The Western standards matter. So if you use Western standards, that's going to affect your pricing on Eastern gas. So they're like, you know what? We're not going to use Western standards anymore. We create and consume most of our natural gas. We're going to use our own standards. And that worked. And now they're doing it with gold. So why are they doing it with gold? Well, because we took their money before. But also because they don't need, it's all about, we're going to make our gold and we're going to make it into bricks and we're going to sell it to someone else. We're not going to use the LBMA style bricks. We're going to create our own style. And I think there's a Shanghai style already. So basically, it's a supply chain. Here's the thing. Supply chain gets pulled over there. Pricing goes into local currencies. American exchanges diminish in importance. Dollar gets a leg kicked out from under it. Again, weaker dollar. And when the pricing moves to another currency, it's almost impossible to pull back the supply chain without taking their money with you. That's it. We're screwed.
Okay, another positive note.
Yeah, another positive note by American.
Well, Vince, you pay attention to so much of this stuff. You're constantly writing about it, constantly, producing content around it. And a lot of it ends up being basically daily noise. So what I wanted to ask you was, do you have a good way to kind of differentiate between the daily noise in the news and what truly ends up being important? And maybe we can, illustrate this by using the example of this kind of push-pull between Trump, Vincent, and Powell. And, on one day he's basically having pressure applied to him, and Trump also saying, we need interest rates lower. He doesn't, he's not helping us. He's not helping our cause. So, how do you kind of differentiate that?
Well, using Trump specifically, that shit's not easy, because let's say you're literally muting the name Trump, right? Mm-hmm. Let's say you're doing that. You can't do that. He's the president. Mm-hmm. So 9 out of 10 things he says is bullshit to stir up Trump, to stir up Powell. And then if you miss the 10th thing, you lose a huge news item. He is the news. So I can't, you're asking me how to. I have developed, I was a student of Trump's style of business in the early 90s. In New York, you had to know about Trump one way or the other. So I'm fortunate in that I know, I'm not going to say I know him, but I know why he does stuff. I know where he's coming from. And I've seen all this before. It's almost fractal, from his real estate to his TV show to the presidency. There's a consistency in his behavior that helps me know when to not pay attention, or helps me to know that's interesting. Let's wait for the other thing he says, that type of thing. So I think the answer is, I can't really boil it down. The education I got on Trump was this. He, when he wants to make it big in an area, real estate, what he'll do is he'll go in. What he did was he'd go in and he'd identify what everyone did to get ahead, like cutting corners or cheating or paying people too little, and he'll do it to the nth degree. Right. And then when his competitors, because they're all in the same club, they say, dude, you can't do that. That's too much. He's like, what are you going to do? Stop me? You're going to stop me? You did
the same thing, yeah.
You did the same thing. Just because I'm doing it more than you, doesn't, I'm all the way in. You're halfway in. And so he does that. Now, that's his MO for dealing with competitors. I mean, he did it with Hillary Clinton.
Mhm.
He came out and said, that's what your friends do. That was an example of that, right?
Right.
When he's talking about the tax rebate, he's like, that's what your friends do. Let's end it. Or let's audit that. Let's look at the Clinton, whatever the hell it is, initiative thing, right? So that's one thing. The second thing about him is he likes to push on walls or push buttons, but it's not stupid. He's pushing on walls to see what gives. So negotiating with Canada, Mexico, and Europe at the same time. Canada sucks, Mexico sucks, Europe sucks. You just push on the wall. And whichever wall gives, you just fucking knock it over. And after he knocks it over, he goes, you want some of this? All right. So when it's not working, he'll change themes. So this is where he is now with Powell, right? Just go right to Powell. He doesn't like Powell. He doesn't want Powell in there. And he thinks that if we get a recession, he can blame Powell. And it's almost like the more he harasses Powell, the less likely Powell is to cut. It's almost like he is influencing him to be stubborn, right? And if Powell doesn't cut, and I don't know why he has to cut, but if Powell doesn't cut, he's going to leave in 8 months anyway, or 6 months, or whatever it is. And Trump's going to say, if there's a recession, he's going to say, that's because Powell didn't cut. If there isn't a recession, he's going to say, well, that's because the bill passed, and it's a great bill, despite Powell not cutting. So it's all spin. With regards to what I'll tell you, I just want to, this is current events, right? So you got Powell is being attacked by Pulte. I think his name's Pulte, right? Vincent said something today that kind of blew me away. They're all doing what Warren used to do when she used to attack Powell. They're just doing it, heavy-handed. I mean, I don't know, except to say, Trump's approach is to set someone else up for the fall if he can't get his way, and it really doesn't matter in 8 months. I'm almost under the impression that the reason Trump said what he said today, which was, it doesn't matter. The whole sour grapes thing, it doesn't matter. Powell's going to be out in 8 months. That's right. So why did you go through all this? And he went through all of it because he probably thought there was a wall. He was pushing on a wall. And my guess is, I'm really just making this up, but overspending, right? That's the Powell angle, that you can get him dismissed for that, or some perjury or whatever. There's two of them. My guess is he saw a crack. He saw a hole in the line of scrimmage, and he went, "Let's hit that hole," and he hit it. And somebody probably pushed back and said, "It's not going to work." He's like, screw it. Yeah, and then I was going to redirect it. I mean, I don't know. It's a current event. I'm not really well formulated on that, but I think
well,
that's
they're
what
all
Trump
interesting.
does.
They're all interesting things to consider, and pushing on the walls to see what gives and to see what he can get away with is an interesting way to put it. And
Right.
The silly part about this is the idea that he was he was appointed by Trump, and now he's so critical of Powell, and yet if we think about his successor now coming in and being way more dovish and accommodating to Trump,
Oh yeah.
that's just another one of your appointees. So it's interesting to understand that spin and that setup for a fall guy if that's what you need him for.
Yeah, I mean, I think there's a couple things there. The first one to respond to is, I think it's brilliant, right? If Powell doesn't ease, he can blame Powell. If Powell doesn't ease and he leaves, he can blame Powell for the next year.
Mm-hmm.
The new guy comes in and cuts. Well, we didn't cut fast enough. Whatever the reason, Powell's there. And Powell, whether he's not cutting because he doesn't want to cut, or he's about to cut, we don't know it yet. Or like, I could just picture, don't tell me that the chair of the Fed isn't influenced politically. I mean, I'll show you the proof about Burns. Anybody who understands that, like, Burns admitted it. He wasn't just influenced. he gave a speech in 1979 about how he was influenced to try and make himself look like a victim. But if you, Powell's got to be in a room going, Palti's attacking you now. Someone's going, Palti's attacking you now, Mr. Chair. And he's like, oh, this fucker, I'm not going to cut rates just because of that. How could you not be influenced by someone constantly he can't mute Trump in his Twitter feed like you and I can. He can't do it. He has to pay attention. It's all over the place. So I can just imagine Trump going, it's win-win. If he cuts, he kissed my ass. If he doesn't cut, he's going to get blamed for it anyway. I mean, I think it's the perfect tactical thing for Trump to do. The other thing is you made a point about he appointed him. Yeah, isn't that interesting? He appointed him. I think someone asked him recently, and he forgot. He's like, I don't know how he got this job. I think but the thing is, it makes him look like if you're on the left, he's like, he doesn't know what he's talking about. Maybe he did forget, but who fucking cares? Mm-hmm. The moment he realized that he forgot, he probably said, yeah, he sucks. I didn't know he sucked then. He sucks now. He's just, all these people in power do, and Trump's just letting you know he's doing it. He's going, I view everyone as a pawn to get what I want. And that's fine, as long as he's steering the country in the right direction. And I still believe he's steering the country in the right direction. Mm-hmm. So whoever the replacement is, can you imagine if he brings in a replacement who's dovish, who doesn't cut? Oh my God, he's going to freak out. He's going to freak out. Like Judy Shelton would love, remember, Trump 4 years ago, strong dollar, love gold. Now he's like, now I understand how finance works. Weak dollar. Let's not talk about gold. We'll talk about it, but we won't, right? Can you imagine if Judy Shelton becomes the Fed chair and she's like, let's have a gold bond? Yeah, that's a good idea. And meanwhile, people start buying the gold bond and they don't buy U.S. treasuries. He'll have a shit fit. Imagine he hires a dove who doesn't cut. That's the popcorn. So I think that the dollar is weakening because it's looking at what you and I just talked about, and it's saying the dollar's got to go down anyway, whether it's Powell or someone else, and it's getting ahead of it. So that's it. Yeah.
And again, this is a process that doesn't happen overnight. This happens over time. There's going to be ups and downs within that. It's not right. You're going to be wrong tomorrow and then right the day after. So, just looking at it on a debt-based, I always blank on this word, entitlement program idea,
right?
That's a one-way equation.
Yeah, something's got to give. I mean, we're not going to cut Medicare. We're not going to cut Medicaid, right? We're going to let white-collar people get fired. We're going to use AI just enough to make the economy more efficient. And we're going to wait for people to die. I'm so cynical right now. We're going to wait for people to die and say, okay, it's over. Now we can move on to the next thing, whatever the next thing is. Mm-hmm. You might want to edit that out. It's I'm kidding. But that's what I mean is it's a generational thing. It'll change with the next generation. And we're not going to cut back until there's less people on Medicare. I mean, isn't that what COVID-19 did? Whether they wanted it to or not, you can see some of them going, so our pensions and our Social Security obligations are going to drop a little bit? Okay. Well, talk to us in 6 months. I can just imagine that. Anyway. Yeah. So I agree.
Well, so many different things to consider here, so many different things to go over. Vince, of course, you do the VBL Goldfix Substack. It is just an absolute treasure trove of anything and everything related to gold, silver, how to trade it, what to look for, and all of the things around it. I really recommend anybody check it out because there is so much very valuable content there. I appreciate getting to read it, and there's different formats there for everybody to be able to digest.
Yeah, it's a big tent in the sense that we'll talk about it educationally, we'll talk about it current events analytically, and lately it's been very trading oriented. So I'm sure people get a little confused because it's a big tent of content. It's about money and gold from the micro to the macro to the secular. So we try and cover it.
Absolutely.
Thank you.
And of course, that's all available at VBL Goldfix. And excellent Twitter follow as well, Soren the K, right? Not Soren Thek.
Soren the K. Soren Kierkegaard.
Yeah.
Yeah, it was my backup account. Yeah, I haven't been posting as much of the nonsense that I post normally. I've been busy working on training my new intern and possibly my new avatar. I'm going to get much better looking for the audience. We'll talk. You and I talked about that already. So
yeah, that's never a bad thing in either of our cases.
That's right. That's right. I identify as an Asian waifu, right? Those anime chicks.
Yeah.
I think I'll get more subscribers if I do that. I'm just looking at the markets right now. Sorry about that.
No problem. Vince, always a pleasure. Thank you so much for your time today.
You too. Thanks a lot.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.